Stop saying I can't use my VA loan because the house is over the loan limit. That statement is mostly outdated. In 2026, the real question isn't what is the VA loan limit? The real question is which bucket am I in? Do you have full entitlement or do you have remaining entitlement? If you get this wrong, you might walk away from your dream home because you think you need 20% down payment when you actually could have bought it with zero down. I'm Kathy Sabater, mortgage broker and proud Navy veteran, and today we are going to fix the confusion. I'm going to explain the post 2020 VA rules in plain English. We are going to cover the high balance county confusion, the VA jumbo myth, and exactly how the math works if you want to hold two VA loans at the same time. By the end of this video, you will know why some people swear VA has no loan limits, and they're right. Why other people still get hit with a cap, and they're also right. How to tell exactly which category you fall into, and the simplest way to estimate your purchasing power if you plan to keep your current home and buy another one. Whether you're buying in a standard market or a high cost area like San Diego. This is the playbook you need for 2026. The big change post 2020. Let's go back into time for a second. Before 2020, there was a hard cap on zero down loans everywhere. But since the Blue Water Navy Vietnam Veterans Act took effect, the game changed completely. Here is the rule for 2026. If you have full entitlement, you are no longer restricted by a county limit. Let me repeat that because it's huge. If you have full entitlement, the VA does not set a maximum dollar amount on your loan. If you can qualify, here it goes, for the monthly payment and the house appraises, the VA will back the loan. 1 million, yes. 2 million, yes. 4 million, theoretically, yes. Now, think about it. That does not mean you can borrow infinity dollars. The VA isn't limiting you, but the lender still has to approve you. Your real limit is determined by your income. Can you afford the monthly payment? Your debts. Is your debt to income ratio, is it healthy? Residual income. VA is the only loan that has this. Do you have enough cash left after your groceries and gas? And the appraisal. Is the house actually worth the price? So when you hear a YouTuber say there's no loan limits, what they really mean is VA doesn't cap zero down loans if and only if you have full entitlement. The two buckets. So how do you know if you have this magical no limit status? Everything comes down to two buckets. You need to know which one you are in right now. Bucket number one, full entitlement. You are in this bucket if you have never used your VA loan before, or you've used it in the past, but you paid off that loan in full and or sold the property. Or If you had a foreclosure or a short sale, but you repaid the VA in full. If you are in bucket number 1, you can stop worrying about county limits. They don't apply to you. You can buy the $1.5 million home with zero down today as long as you qualify for the payment. Bucket number 2, remaining or partial entitlement. This is where the limits come back to haunt us. You're in this bucket if you currently own a home with a VA loan and you are still paying the mortgage, or you paid off the loan but you kept the house, maybe as a rental, or you had a previous compromise claim, foreclosure, short sale, and never repaid the VA. If you're in bucket 2, you don't have your full guarantee available. You only have a piece of it left. And this is where we have to do some math. Math it is. What is entitlement? This is the simple version. To understand the math, you have to understand what entitlement actually is. It is not cash. It is not cash. The VA does not give you a bag of money. Entitlement is an insurance policy for the lender. The VA promises the lender, if this veteran stops paying, we will cover, check this out, 25% of the loss. Lenders love that. That 25% guarantee is from the VA is what gives them confidence to give you a loan with zero down and no PMI, premium mortgage insurance. If you have full entitlement, the VA guarantees 25% of whatever loan amount you take. But if you have partial entitlement, you've already used up some of the insurance on your first house. The lender looks at your file and says, the VA is only covering 10% of this new loan. That's not enough risk protection for us. So you, the borrower, will have to fill that gap. So what are the numbers people actually search and misunderstand? Every year, the government publishes loan limits for 2026. The baseline is roughly 832,750. In high-cost areas like San Diego, it could potentially be over 1.1 million. Here's the secret. Those numbers are not a cap for everyone. If you are full entitlement, those numbers mean nothing to you. Ignore them. If you are remaining entitlement, those numbers are the calculator we use to figure out your remaining buying power. The zero down math, remaining entitlement. Okay, are you ready? Let's do the math for bucket number 2. Here goes the scenario. You own a home with a VA loan. You want to keep it as a rental. You want to buy a primary home with your remaining entitlement. How much can you buy without a down payment? The formula. Lenders need 25% coverage. So we take the county limit and multiply it by 25%. That gives us the max guarantee bucket for that county. Then we look at how much entitlement you've already used on house number 1. Now we have to subtract that number, whatever is left over, and then we multiply it by 4. Okay, let us use real numbers. Ready? Say you're in a county where the limit is roughly 832,000. The max guarantee bucket is roughly 208,000. And that's when you multiply the 832,000K by 25%. Now let's say you use 60,000 of entitlement on your first home years ago. Real easy math. You take the 208,000 from your total bucket, we minus it from the 60,000 that you use, and we have a remaining of $148,000. Now, the magic step. Take the remaining 148,000 and multiply it by 4. So if you do that, you're going to get 592,000. That means you can buy another home up to 592. Guess what? With zero down. But Kathy, what if the new house costs over that a dollar amount? Does that mean I can't buy it? Oh, no, 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 no. It just means you can't buy it with the zero down. You simply have to make a down payment to cover the difference. You have to cover the 25% of the gap. If your zero down limit is 592, ready for the math again? And your house is 700,000, the gap is 108,000. Don't panic. So we need 25% of the 108,000. That's roughly $27,000. So think about it. You're buying a house around 700,000, your second property, and you only have to put $27,000 down. That's roughly 3.8% down payment. That's an incredible leverage. Most investment home loans would require 20% down. Here go 3 real life scenarios. Let's lock this in. Ready? Let me know if you can identify yourself. Number 1, first time buyer. You just got out of the Navy. Woo-hoo. You want to buy a home, 900,000 house in a standard county. You never used your VA loan. Verdict. You are bucket number 1, full entitlement. You can buy the $900,000 home with zero down. The limit does not apply to you. Scenario number 2, the landlord. You bought a condo in Norfolk 5 years ago. You are PCSing to San Diego. You want to rent the Norfolk condo and buy in San Diego. What's your verdict? You are in bucket number 2, remaining entitlement. We need to check the San Diego limits, subtract your Norfolk entitlement usage, and calculate your remaining purchase power. You might be zero down, or you might need a small down payment. Scenario number 3, the oops. You paid off your old VA loan, but you still own the house as a rental. Verdict, this is a tricky one. If you didn't apply for a one-time restoration, your entitlement might still be trapped in that house. You are likely in bucket number 2. We need to check your certificate of eligibility, your COE. So to be sure, here goes the 3 gotchas. Before we wrap up, watch out for these 3 traps. Gotcha number 1, the VA jumbo myth. Some lenders will tell you, oh, the VA limit is $832,000. So anything over that is a jumbo loan and needs 20% down. False. That lender is applying their own overlay, or they don't understand the 2020 rule change. Find a lender who knows VA. Gotcha number 2, high cost counties. If you have remaining entitlement, moving to a high cost county like San Diego, DC, actually helps you because the county limit is higher. The guarantee bucket is bigger, which gives you more room for that second loan. Gotcha number 3, eligibility versus entitlement. Just because your COE, certificate of eligibility, says you are eligible doesn't mean you have full entitlement. You have to look at the codes on your COE to see if any entitlement is charged to a previous loan. How to confirm your bucket. Here is the fastest way to know where you stand. Ask yourself, do I own a home right now that was purchased with a VA loan? If the answer is yes, assume you have remaining entitlement. We need to do the math. If the answer is no, and you do not have foreclosure in your past, you likely have full entitlement. Sky is the limit. What are your next steps? In 2026, VA loan limits are not the barrier people think they are. If you have full entitlement, there is no cap. If you have partial entitlement, it's just a math problem. Just have to calculate, and usually very solvable. If you want to know exactly which bucket you are in, I can pull your COE, Certificate of Eligibility, and run the numbers for you in about 5 to 10 minutes. Comments limits below, and I'll send you my entitlement checklist so you can see exactly how much you can buy with zero down. I'm Kathy Sabater. Stop guessing, start owning, and I'll see you in the next video.